Welcome everyone. The topic for the discussions today is key performance indicators to understand business performance analysis. This is what we will about it. So basically, what is it? We will understand the current performance status. We will talk about the focus on the critical issues. Remember, critical issues will depending upon different issues altogether. This is what we have to understand every now and then. What are we looking at it? For every industry, the critical issues are completely different, and thereby we need to go across it. So to reinforce accountability and action plans of each terms, definitely yes, and importantly to remove barriers thereby. This is what we will be looking out every now and then. That is the point. Again, I am reassessing what is the current performance status of the company, focusing on the critical issues, the goals, and the object to reinforce the accountability and the action plans of each team or each individual. And last but not the least is to have any barriers if there to be removing. What is the agenda? Probably essentially all my agendas would be about a business review and financial performances. The point number two, three, competitors analysis, client project updates are beyond the purview of this particular presentation. We will be talking about the key performance indicators, which are basically present in point number first and second. About the client project is beyond the purview, right? So let us focus on the key performance indicators as to understand the business performance. So, what is a business overview? Remember, for any businesses, we can have the growth curve in terms of revenue that comes around it, in terms of quality factors, the number of grievances that has been coming. If there are any complaints that we are having, the number of joint ventures that we have done about it, the number of franchisee that we have opened, the number of business partners we have done, the number of shareholder wealth that we have created, and this is what we are looking at it. This is the final system of the things that needs to be done. So we need to highlight all those points, and again I recollect the same factor that these things are factual in nature and will vary from organization to organization, business to business, vertical to vertical. Even from the same business, different vertical would be projecting different kind of growth, different kind of revenue, different kind of partnership, different kind of wealth for the organization shareholders thereby. Let us have a proxy situation of a particular year. Let's say in the year 2022, what was my share, which is EBITDA. It's earning before income tax and deduction and allowances thereby. So EBITDA, what is my total gross revenue? Mention your earnings, and then also state, this is very important. Has it improved? Is it plus 10%, minus 10%, plus 2%, minus 5%? What are we doing about it? Q and Q, quarter on quarter revenue growth. Again, project your growth. Probably that is what we are looking into it. The net income that comes around, and I'm just giving a juxtaposition of an example that comes around it. It is your net revenue that you generate with a net profit, which can be coming to your attention altogether to your requirement as for the net commitment is there. So we speak about the financial summary every now and then in front of our shareholders, in front of our board members, and come up with the viability of the company as in what we are looking into it. So that is what, moving to the other parts. Now this is something which we can go about in verticals altogether. This can be functional, this can be geographical, this can be business oriented or product line basis. I have just given you a clarification to understand how in geographical diversification, how will it relate to. You have 20% of the business from North America, 15% from Asia, 30% from Africa, and simultaneously is spread across the globe. You can tell the revenue split. It might be a global company, it might be a Google, it might be a Facebook, it might be a Coca-Cola, it might be a Pepsi, it can be Adidas, it can, you name it, and we have, there are so many companies which are present across comes around it. So we can split it by revenues, by country. This is probably what we are looking at it. This is what we can do. accordingly, and we can understand which countries to focus around it, whether it's Russia, whether it's Brazil, whether it's Africa, whether it's Australia. We'll come to across it. That is what we are looking in the first place. Mind it, what I'm trying to give you a key performance indicators, as in which all market things are going in the right. Now we have to understand the product line. Probably this is something which we have set it up across the product, across the quarters that comes around it. Can we improvise upon the quarters time and again, relate to it then and there, be upfront with it, and probably signify. Remember, what I'm trying to show it to you is a metrics that we can build around it, and this metrics has to be industry specific, or should I say it should be company specific. Within an industry there might be company which are operating on a local level, and then there are companies which might be almost present in a universal scale altogether. So you need to understand the metrics that needs to be developed together. We have the product split in terms of segments. We have been seeing about the Q1, Q2, FY, for the year, whatever you want to go and which quarter for the year, which quarter number three for the year, and so on and so forth. Remember, it can be a different kind of products of your company. A company will not be only manufacturing or probably catering to only one particular products. Thereby, they are bifurcating. Even in food and beverage industry, there are different menus that has been going off the shelf. Even in the retail industry, there are different types of shampoos or dental cream that is available in your product portfolio. You name it. There are in the pharmaceutical industry, there are something called a specialized drugs, generic drugs for the same illness that has been split around it. Based upon it, we can split it on the product basis. Based upon it, we can split it on the segment basis, and thereby project it in terms what can be done, expected in process. Remember, key developments or milestone achieved is all about launching the new product. It is all about achieving the new 100 million in a single quarters, and probably receiving. I am just giving you an example of having a top exporters for the year so and so award that comes around it. This is what we look into it. We have to ensure that we are projecting a positive image about the companies in the years to come, and the mind of the shareholders there. Let us come to the financial performances thereby. I have just given you a business overview as to how good, bad, or not so good the performance of company is being reflected. So let us understand the KPIs, the profit and loss KPIs. Let us say the cost of goods sold, what we are looking into it. Let us talk about the revenue parameters. These are the parameters that comes around it. What about the operating profit and the net profit? Remember, EBITDA is earning before income tax deduction and other allowances that comes around it. Whether net profit and the operating profit two are two different things. Cost of the goods sold, it is amount of the quality of revenue that comes around in the system. Probably the cash transaction that passes by, that is what is most important. So profit and loss KPIs are very evidently placed to understand the business performance altogether. So these are the key performance indicators in terms of revenue, in terms of COGS or cost of goods sold, in terms of our operating profit, and the I have just given you a balance sheet to understand what is the cash flow for everything of one particular quarter. See, these are the Q1, Q2 for the year 2019 that comes around it, or anything. So we talk about the net sales, we talk about the total income, we talk about the expenses, what is my total material consumed, the employee benefit, the EBITDA that comes around it, the profit before tax and profit after tax. If you look into it, this has been the net profit that comes around it. This is the percentage at tax, which is 9.5%, 9.2%, 11%, and 9.6%. On an average, it works around at 10% that the PAT is there. PAT is profit after tax. So this gives me a vibrant key performance indicators about the performance of the business. So balance sheet is another one of the things that comes around it. It is CAGR wise absolutely on cumulative growth basis of the revenue, as far as your current asset, as far as your current liabilities, the total asset thereby, and the total liability. So you have something which is on a very short term basis, which is your current asset, and it varies similarly for a short term basis on what are your liabilities that needs to be taken care of. It is again varying, and the total assets vis-a-vis this might completely change the sequences altogether for you to understand the business performance of any the asset. It is 47340. This is equivalent to the liability. To understand everything, the total asset is equal to the liabilities going around it. Let us understand the KPIs or key performance indicators as far as cash flow is concerned. We will talk about the financial activities. Yes, we will talk about the operations activities, as in the salaries and things like that, as in investing and activities, and the net increase in the cash flow. CAGR, that is what we are looking out here. We need to understand what is the increase which has been done on an automatic basis altogether. We will say everything which is coming across. Now, remember, CAGR is nothing but compound annual growth rate of company. So, annual growth rate of a company that needs to be taken care of by every one of us. That is what we are looking at this point. So, cash flow statement are an indicators that cannot be negative any point of time. Let us understand the tabular form for the year of 15, 16, 17, and 18. It's an historical thing. It's a proxy situation that I'm giving it to you for your understanding as for the cash flow from the operation, from the investing activity, from financing activity, and the cash equivalent thereby. Again, a cash flow statement can be generated. What we are looking. With this, I come to an end of this presentation. Thank you for watching this video.